Please subscribe to the channel, press the bell icon to be notified of the latest videos. Today's trending topic is another market crash coming soon. What should you do? This is Sage here for kalkinemedia. Predicting a stock market crash is not easy, and a lot of renowned investors have had their fair share of failures when calling a crash. A stock market crash is different from a normal correction and happens once a few years. The most recent example is the COVID-19-led stock market crash in March 2020. So what is it about stock markets that alerts investors to run for cover before the storm? Currently, some investors think that we are in the midst of another big bubble in financial markets, which is just getting bigger. And the primary concern of investors is that the coronavirus is not likely to go anywhere anytime soon. The world has witnessed the pandemic's severe impact on the economies. And additionally, the threat of new and more contagious mutations of COVID-19 continues to loom large on a global scale. Another reason investors feel worried is that the market has been going up, ignoring the risks of more than a year now, and that's somewhat not aligning with the current economic scenario. With vaccination drives underway and reopening of the economies, the future visibility of the company's earnings has improved. And even though the situation is no way better than the pre-pandemic times, the record highs in some of the benchmark indices across the globe and uncomfortable valuations of some popular growth stocks probably aren't justifying the risks ahead. The third major concern is inflation, and the interest rates are at record lows in many countries, encouraging the economies to get back on their feet. However, keeping the interest rates low also has a negative effect on the economy as it gives rise to inflation. And the recent inflation figure in the US spooked investors with a rise of 5.4% in June 2021 and the biggest monthly rise since the last crash in 2008. And stock markets generally don't do well during an inflationary period, although commodity-based businesses perform quite well. So if the crash is coming, what can you do? Going by the name, a stock market crash sounds like an adverse event, which it is for some. At the same time, these events are probably once-in-a-lifetime opportunities to grab dirt-cheap deals which otherwise would never be available. And as a famous saying goes in the stock market, you may make money in the bull market based on your decisions in the bear market. So here are a few suggestions to make the most of the next crash whenever it comes. Firstly, keep cash ready. As mentioned earlier, the share market's prices for some of the strongest companies would be available at mouth-watering cheap levels during a crash, and you would want to seize this opportunity by lapping up those stocks that have fundamentally strong businesses and robust balance sheets. It is also important to steer clear of the noise, as in all that melee. It is easy to get tricked by the surrounding panic and eventually miss the opportunity. As Warren Buffett says, be fearful when others are greedy and be greedy when others are fearful. When there's too much blood on the street, that is probably an ideal time to get in. Next up, be diversified. Diversification simply means to allocate your capital into various asset classes or sectors of economy. Diversification is one of the effective ways to reduce the volatility of the portfolio. It also helps to tone down the concentrated risk of any on security. And during a market crash, investors chase safe haven assets such as gold, which is why these assets tend to appreciate in value during a stock market crash. During these times, you can take exposure to these safe haven assets, which helps stabilise the portfolio by toning down volatility and minimising the risks. Weed out junk stocks. During a bull run like the current one, every stock tends to perform well. Even a low-quality company's share price tends to rise in the value. However, when the tide turns, only those with sustainable businesses, strong cash flows and strong balance sheets survive. The rest all go to the dogs. Holding a junk stock in hope to see it reach the break-even price is one of the biggest mistakes committed by investors during a crash. Weed them out and add the high-quality companies. Hopefully that has been informative for you, and if you like the information, please like, share, comment on the video below, subscribe to the YouTube channel, just press the bell icon, you'll be notified of the latest videos. For more information and regular updates, head to the website kalkinemedia.com. This is Sage for Kalkinemedia.